Hey everyone, today I'm going to talk about scaling out and how scaling out allowed me to become a profitable trader. So what is scaling out? Scaling out is where you take partials and take partial profits off the table during a trade. What this allows you to do is it allows you to capture some profit early, and then if the trade reverses and comes back against you, you still secure that profit. So my system, what I do is I have a 1 times average true range. So that's sort of like the average daily range that the price moves across the last 14 candles. And I take that average, and that is my first take profit target. So the reason I do this is because price tends to move within that range. So further to that, that's the same reason why we have a 1.5 times average true range stop loss, because price tends to move within that 1 times average true range, so you don't get wicked out or stopped out. So what I do is I place 2 positions and I place them with the 1.5 times average true range stop loss and a 1 times average true range take profit. Now, once I hit that take profit, I then close 1 position and I move my stop loss to break even. So I've now scaled out essentially. You can also scale in. I'm not going to talk about that on this episode, but we'll talk about scaling out specifically. So let's jump to the charts and I'll give you an example. Okay, so let me show you this winning trade that I did on USD CAD. I've actually got a couple of lessons here that I want to cover, and I'll walk you through those. So how the trade actually played out was we hit our first take profit. So we entered off this candle here. All of our confirmation indicators told us go, and we put a 1 times average true range take profit. So we got our 87.4 pips profit. All good. And then the trade actually continued to go further. So I thought, okay, awesome. So I've still got half size on and the price is still moving up. So I was getting pretty excited about this. I thought that the trend was going to keep going. And at that point, when we hit our TP1 over here, I'd already moved my stop loss to break even. Then the trade actually came back all the way and only just wicked me out, which was really unfortunate because now the price has come and moved all the way up to 311.9 pips. So what did I learn from this? Well, what I did learn was I'm not too worried, because the market is always right. So it's possible that the price could have continued going down and also gone all the way down and taken me out, right? But in the end, a win is a win. So, and why this is important is because there will be a lot of trades that the price doesn't go as far, it wicks you out and it would have gone further, but you've now secured profit. And it's you might think, oh, maybe it was better to have actually just left the trade as it was and not apply trade management and just let it run, and you would have got 2 positions, you would have caught all of this. But that's not the case, because most of the time the market's consolidating anyway, so you're not always going to get these big trends, and every time you catch these small one-time ATR wins, over time that's going to build up your account, and then it allows for some room for some small losses as well. And one thing I did learn, and this is something that I've added to my system, is once we get to 2 times ATR, which would have been up here, that is when we start using a trailing stop loss. So what I should have actually done was taken once we hit this price here, 2 times ATR, this white line up here, we should have turned on our trailing stop loss here. Now, when the price had come back, instead of wicking us out and, we only get 87.4 pips, we would have actually hit our trailing stop first and we would have secured another 47.6 pips. So that is why the system you should scale out, you should move your stop loss to break even, take half off at 1 times ATR. Then at 2 times ATR, you should turn your trail stop on, because you can carry and ride that move all the way up. And if it does come back, you even get to lock in extra pips as well. So over time, this is all going to add up and build up your trading account. Of course, you can also use an exit indicator. So had you have been using the REX as your exit indicator, when you cross back down under, which is over here, this candle here actually, you would have exited the position anyway. So you would have got your 47.6 pips. So the trailing stop and the exit indicator actually happen to occur around the same time, but whichever comes first, that's your way out of the trade. Thanks for watching. Make sure you like and subscribe, and I'll continue to bring you free content.